Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to our weekly podcast. Global risk assets came under pressure amid hawkish commentary by the US Fed chairman, mixed US employment data, and a sell-off in the banking sector and concerns over financial stability of a US-based lender. Major global indices registered one of the worst weekly declines this year, with the Dow Jones Industrial Average, S&P 500 and Nasdaq falling by 4.4% to 4.5%. The MSCI Asia ex-Japan fell 3.9% for the week. Bond yields edged lower sharply over the last 2 days of the week as investors rushed to safe haven. The US 2-year Treasury yields fell over 50 basis points over the past 2 days of the week to close at 4.59% after rising past the 5% mark during the week. Back home, Indian equities edged lower over the truncated week but outperformed global peers. The Nifty index started on a positive note but came under pressure over the last 2 days to post a decline of 1% for the week. Broader markets outperformed Nifty this week, with the Nifty Midcap Index up 0.1%, while the Small Cap Index was down 0.1% for the week, respectively. Among sectors, utilities and energy were the best performing sectors, with gains of 6.5% and 1.9% respectively, while realty and banks were the worst performers, with cuts of over 1.9% for the week. The Indian fixed income market came under pressure at the start of the week, with bond yields rising across the curve in line with rising US bond yields and growing expectations of tighter financial conditions going ahead. For the week, the 10-year Indian government bond yield rose by 3 basis points to 7.43%, while the 3-year government bond yield rose by 4 basis points. The INR closed flat over the past week as the impact of foreign investor outflows were balanced by lower crude oil prices and a range-bound US dollar. The INR closed the week at 82 per dollar. Among other important news over the week, first was on India's industrial production, which grew higher than market consensus at 5.2% year-on-year in the month of January 2023, following a 4.3% rise in December. This improvement was led by strong manufacturing sector output, which grew 3.7% year-on-year, while the mining sector and electricity sector output grew by 8.8% and 12.7% respectively. For the period of April 2022 till January 2023 period, the industrial production grew 5.4% over the same period last fiscal. The second set of data was on India's tax collection for the period of April 2022 till 10th of March 2023. The gross tax collection during the period rose to INR 16.7 trillion, which is up 22.6% compared to the same period in fiscal year 2022. India's net direct tax collections during this period rose 17% to INR 13.7 trillion. The growth in the overall direct tax collection, which comprises personal income tax and corporate tax, was primarily driven by personal income tax collections. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.